People are unaware of what is about to strike the market. XRP, Tom Lee. Greetings, lovely individuals. Shalom, cash producers. When the markets were at their lowest, when things were down considerably and it was looking awful, Tom Lee gave an interview today on CNBC. Tom Lee expressed his views. We're going to hear what Tom Lee had to say, how this might influence XRP, the cryptocurrency market, the general markets. All of that will be discussed. We also received a report on the present U.S. condition from what President Trump just stated. All I want from you is a lovely smile to spread the good vibes. Whatever your heart wants, press it, click it, caress it, smash that like button, smishity, smash that like button. Now let's start. Thus, XRP, now at $2.08 down about 2.5% on the day. It was slightly lower than our run-up. The stock market closing has caused some market pullback now. After we observed a slight run-up there, we are noticing some pullback, but generally speaking, XRP is still within this downwards long-term trend. It will be fascinating to watch as April 2nd approaches, increasingly closer. The day Trump says everything changes, what will happen with the markets? This morning it appeared as though the end of the world, as though the markets were about to collapse, and then it began to rise. Purchases began. Jim Cramer claimed anyone buying today is insane. Given the ambiguity, given our lack of knowledge about how the markets will respond on April 2nd, I can see why Jim Cramer would claim that. I understand why. One might assume that, but our current situation is quite fascinating. Donald Trump tweeted, "Will never be a transformation of a country like the transformation that is happening for all to see in the United States of America. Jobs and money to follow help companies flooding into our nation at unprecedented rates. It's a lovely thing to see." Correct. I also wish I could imitate Donald Trump. It's a lovely thing to see. No, that was awful. That sounds like something Sean Connery would say. I have to improve it. I have to deal with it. We had that scenario, but the president is saying, hey listen, now we might be feeling a little bit of pain because of the uncertainty, because of the fear that this current tariff situation is creating, but long term, this is going to be good. Once more, whether you are short-term or long-term will determine how you react to the market, how you view the market, and everyone has to decide for themselves how they wish to respond to the market. It's all different, and it all merits a different response from you, whether you're day trading, swing trading, short-term or long-term. Once more, a reaction could be a buy, a sell, or just sitting on your hands and doing nothing. It all depends on your choice of action. And naturally, this is not financial advice, for entertainment only, for educational reasons. Before you make an investment, you should always conduct your own due diligence. It will be quite fascinating. Let's look at what Tom Lee said on CNBC this morning, not too long ago. The headlines are visible. It claims that this week, markets might have the appropriate components for a bottom. Let's wait to hear what he says. A CNBC contributor, Tom Lee is head of research at Fundstrat and chief investment officer of Fundstrat Capital. At the time I believe you were discussing some of the technical staff members in your shop as well as others. You felt we were at least near a bottom. And off camera we were talking, I said maybe in terms of timing, that was about a month early, but in terms of how far the markets really went down, you're not off by that much. Believe the SP was down roughly 6%, now seems like if it opens where it is now, it'll be in correction territory again, down 10, but you have the same sort of feeling for this week, that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom. Sure, I mean both. Obviously it doesn't feel this way since futures came under pressure over the weekend, but we know markets are really oversold. Investors have done a great deal of de-risking, we know. This week I believe until April 2nd, investors are thinking about three items. One is they simply lack knowledge of the appearance of the tariffs. They have no idea whether it will harm the economy. Many I believe are simply somewhat afraid of White House policies. But after one, I meant to pause here since these are the three topics we have been discussing on the channel for the last 3 days. It's amusing too, given that those in the comments area say you have nothing left to discuss, you just keep talking about it. Sure, the material is this one. The market is at a turning point in this situation. It is extremely crucial. People who don't grasp this will not grasp the situation and the markets. This time they will fail. When it comes around again, they will likely make errors, and probably not have precisely the same thing, but there will be something similar in 2 years, 3 years, 4 years, and 5 years. You now have the experience of going through this, and you will know possibly how you want to respond next time depending on how you react this time. Should it succeed, fail, next time, you will know to be better. Those 3 items we've been discussing ad nauseum are influencing stocks, cryptocurrencies, and XRP as well as the market. When you are in the markets, it is extremely crucial to grasp these issues. I believe Wednesday will give markets some visibility, which will help us to relieve some of the selling pressure. Therefore, yes, I believe it's conceivable that rather than us breaking down here and given markets under more strain, we really have the correct components, though into this without knowledge of its other side. People are sitting around today and tomorrow attempting to answer the basic question, that is, exactly. That is. So that's just what I said about, with Jim Cramer, with Jim saying, buying today, buying in the days coming up to something that it's so unknown, it's a major gamble. It's akin to when, say, a corporation has profits, and you have no idea whether they will be positive or negative. Essentially you are gambling. Or a bet, correct? What are they going to say about the next quarters then, given you don't know what the company will say? So there is always a danger. That's why, given the choices prior to an earnings call, the earnings volatility is rather significant. No, uncertainty causes the implied volatility to spike. Uncertainty increases risk. No, that's where we are then. Given the market's ignorance of how to proceed, everyone will respond to these fresh terrors about to come into effect. It's still 3 days, so for individuals it's an endless wait. They fear we might have 3 days of down 2%. Still, I somewhat concur with Larry Fink. The US, in my opinion, will emerge from this. Understood. Mean Brexit's an example. No, Brexit occurred and the UK economy came out. Understood. The stock market did. It didn't have a major recession. Understood. Many of us over the weekend believed the economy would totally derail after Wednesday. Thus, for investors today, people are beginning to notice ongoing inflation and declining growth. Put those together and you have the inflation that's fatal for, certainly. I mean, the economy is quite distorted right now. No, knowing individuals are purchasing cars and wine in advance of tariffs helps to explain the inflationary effects. Hopefully they're not doing it the same. No, automobiles and wine. Do you believe the growth figures we are observing at this time are being pushed up? Do we retail sales in other locations, or is that too minor to affect things on that higher level? Given that rates are down and gasoline is down, and there may be some pull-forwarded demand, I believe it is conceivable that economists are only dialing in the negative effects so far, but not the positive. We could eventually have better growth, thus less stag, and perhaps the inflation concerns are more distorting, hence it's not as stagflationary. Some of your recent calls have proven prescient, bullish calls related to inflation not being as severe as expected. Do you still believe that? Given the head fake that perhaps it's still around, and you add tariffs, some of the figures have, at least given the head fake that perhaps it's still around, and you add tariffs. Goldman Sachs just told us 3.5 on the PCE is not going to let the Fed to relax, a half a point higher on the PCE than they thought before. I mean, yes, it's fascinating, since Goldman did increase their inflation projection, but then they mentioned further rate reductions. I understand, which is due to worries about expansion. Indeed, given that he speaks Friday following the jobs report, I believe we will have some insight into Fed Chair Powell's thoughts. I also believe that there it stays a more dovish Fed than most anticipate. I suppose that's what came out following the March FOMC meeting, and not them claiming it will reverse markets here, but I believe investors are a bit too afraid going into winter. I suppose once more Bitcoin is testing recent near-term lows. It has been below 80. It's not quite there. It certainly is a trade-off risk. When the Nasdaq falls, Bitcoin appears to fall as well. On the other hand, it also really enjoys the concept of the Fed being more lenient, or more rate cuts. So if we receive that on Friday, is this a reasonable moment to be stacking? I believe so. At 80 you do. Sure, part of this was Bitcoin seasonally, was just not going to be appealing until after March ends. At last we are leaving March. So I believe the calendar is improving not only in appearance, but also as you indicate. Fed and central banks are relaxing QTs concluding. Positive Washington sort of tailwinds, in my opinion, help to indicate that Bitcoin may perform well, until the end of the year. Correct. People enjoy it when I inquire about your personal Bitcoin goal. Certainly. Very enthusiastic folks. Indeed. I mean, what insane high